Hey guys, welcome to another video. Thanks for joining me in this one. In this video, I'll be talking about the GE reverse stock split that just made the news. Now, right now, GE stock price just took a plunge, and I believe there's a reason behind it. And I'm going to be explaining all that to you in this video. If you're new on my channel, my name is Steven Ojo, and on this channel, I talk about aviation and finance as it relates to investing. So if you are interested in any of those, please consider subscribing to the channel, and don't forget to give this video a thumbs up as it helps to push it to other people as well. So let's get to it. Now, one thing I'd like to make clear to you is that, a lot of information often get into investors' hands too late. And this one that is coming out is obviously a late one as well, because there's a reason why a company performs a reverse stock split. So what is a reverse stock split? Well, a reverse stock split is the opposite of a stock split. As we've heard recently about the Apple stock split and Tesla stock split and so many other companies like that, a reverse stock split is pretty much the opposite. When a company issues 1 to 5 shares, which means that for every one, you would get 5 shares. That is a normal stock split or just a stock split. When it's reverse, that means for every 5 you own, you would get 1. So in this case of GE, they are planning to actually do a split of 1 to 8. So that means for every 8 shares you own, you would get 1 share. Now, a lot of investors often see this as bad news for the company because it means that, well, things are not going well according to plans. When that happens, what happens is that the share price of the company starts to decline. And as it declines over time, the share becomes unattractive to investors. If you think about this, a lot of people often steer away from stocks that sell less than $10. Some people have a rule that they don't buy shares that are less than $20. Some are $5, so it depends on the investing style. But generally, a lot of hedge fund managers and mutual fund investors and all these big, fund guys, they stay away from certain type of companies. And again, it's all because of their share price or the stock's price. With the case of GE, right now it's trading around $13 the last time I checked. And that obviously is a recent development, because if we could remember, GE was selling for around $6, $7 recently as well. I believe that the reason why GE is making this move that they're making now is obviously to try to consolidate the number of shares that is currently sitting around almost 8 billion or 8.9 billion of shares that are outstanding. And if they do this 8 to 1 or 1 to 8, depending on how you look at it, well, what will happen is that they will end up bringing the shares down to about 1 point something billion outstanding shares, which would then push the share price to around $108 or $111, depending on what the share price is. So just remember the key thing here. The value of the shares does not change. The number of shares is what is really changing. So at the end of the day, if you own $1,000 worth of GE stocks, well, what you would have at the end of the day is still $1,000. But instead of you having, say, 50 shares, you would come down to maybe 10 shares. But at the end of the day, your value doesn't change. Now, the other reason that I also want to mention in this video that GE may be doing this is the earnings per share. And this is very important, because if you remember that earnings per share is the total earnings divided by the outstanding shares. So if you have a ton of outstanding shares, your earnings per share is lower compared to if you have lower number of outstanding shares. Your earnings per share is increased, which will make the stock of the company more attractive to investors. Now, the other reason why a lot of companies perform reverse stock split is to avoid getting delisted on a stock exchange. A lot of, for example, let's say the share price goes down below $5. Well, S&P 500, for example, you will get delisted. And sometimes there are so many other reasons why they might get removed on a stock exchange. So in order to avoid that, a lot of companies will perform a reverse stock split so that they can increase the share value to remain on that stock exchange that it is listed on. So what does all of this mean for GE? Now, in my opinion, I believe GE is trying to just restructure and turn the business around overall. Now, of course, this may seem like a terrible news because it's generally not a good sign that a company is performing a reverse stock split. It's just a way of trying to patch the holes. Generally, that's the way it's looked at, the holes of failure going on in the company. So in order to patch it and make it look attractive again, they try to do this reverse stock split. But in my opinion, GE has been taking a lot of steps in turning the business around since a new CEO stepped in. And I believe that that is exactly why this has been done as well. Now, of course, every CEO needs to make the company more attractive, because the more attractive the company is, the more investors they attract. big guys, small guys, the middle guys, everybody comes in because the company looks good. And I believe that doing this is a good thing for GE long term. Temporarily, I believe there will be a decline in the stock price until their next financial report. That's when we can really tell exactly what the impact of this reverse stock split have on their performance in terms of their earnings per share and their revenue, and also how much changes has been made in terms of reducing their debt. As we know that debt is one of the major issues GE is having, and the ability to reduce their debt to a very bare minimum is very, very important in their long-term survivability. So to be honest, I'm not worried because I also have some GE shares. If you check my last video about GE, you see that there. I'm not worried about that because I believe that GE on a long term, they will do well. And also just recently made the news about their GCAS in terms of leasing of aircraft to companies worldwide. They are going to be merging with another company. And obviously this is a good news on GE's path. Now that's all I have on this video. It's going to be short because I just wanted to make it sweet, short and simple, just to explain what a reverse stock split is. And if you're investing in GE, just to let you know that, to be honest, it all depends on the financial report that gets released next. That would really tell what the impact of this decision is. For now, we don't really know, but if you're holding on to it, I would say, you should be fine long term. And that's exactly what I'm doing as well. I hope to see my video next time. So if you haven't subscribed, please consider subscribing to the channel. And don't forget to hit the thumbs up on this video. I will appreciate it so much. See you next time.